Can I make a tiny announcement? I'm getting a lot of questions on schedule. I apologize. The schedule in your book is not correct. So you want to go to elitedealmakers.com/Orlando. Right. I'm sure I could technically pull this up too, but and you're going to hit view schedule. That is the schedule we're following. So elitedealmakers.com/Orlando. So today our goal is to have you out of here so that you can be networking at 5:30 and having some snacks and drinks. That's the goal. Or 5, I'm sorry. We have a break, 30-minute break, but yes. Do you have enough chairs, Jim Ingersoll?
Yeah, could you? Thank you. Okay, so I want to talk about raising capital with people that are actually raising it. I have raised millions of dollars. I do it by telling my story, and my best lenders over the years, in many cases, are people that are not real estate investors because they don't understand returns. That came out wrong. What I meant is their expectation for returns isn't the same as mine as a lender. Is that fair? So they may hear 7, 8, 9% and say, wow, that's amazing. And they don't understand points, okay? They're also What happened? Oh, I'm back on. Oh, just share the one then. All right, so starting with you, Randy, you've got a fund. Tell us what you do, Mission Funding, Chattanooga, Tennessee. But tell us about your fund and how people can participate in that fund.
There we go. We only started the fund a year and a half ago. When? Yeah.
Wow.
So it wasn't. We kind of did the fund out of necessity. We've been in the hard money lending. I've been in the real estate space since 2008. So, and I've always raised capital for, we had a pretty big flipping business at one point, and I kind of I didn't want to flip anymore. So I kind of got into hard money through just out of necessity because I didn't want to flip anymore. So the reason we set up the debt fund in October about a little over a year ago, and it was mainly because I had a $3 million credit line from the bank, plus we had private capital that we were using for the hard money lending business. Well, my $3 million line got called on us, so and it was kind of nothing on our part. It was one bank sold to another bank. It didn't fit their box, so we started the debt fund or whatever.
How'd you raise the capital to fill your fund?
For the fund, when I got started, I had already raised capital for my flipping business.
Okay.
Converted that over.
Yep, that's common.
So as far as the debt fund, it's just talking to people and
telling your story.
100% telling your story, and it's just talking to people. We really haven't advertised, and if we have advertised, nobody has come through that. We just started a podcast. It's went incredibly well. We've got a little over $4 million in there, just in a year and a half.
Doesn't he make raising $4 million sound simple? Just tell your story.
Okay, so part of that is just like you got to look at the 17 years,
I hear you.
And all the stories I could tell over those 17 years going into that. But the easiest way is just to talk about deals.
Yeah.
So 100%. If you've got some kind of background you can leverage on, or for Tony's. Tony doesn't have the background. I hired him to come work for me for almost a little over 4 years ago, and he took me from running it as a hobby into really just blowing it up. So
I think we all need a Tony.
so, well, it's focus because I'm all over the board. I'm in
Visionaries are.
Yep. So, but absolutely. That is, I hired him. I knew him for years. He worked for the bank, and I knew his ethic. I knew him before I ever hired him. So I got to see his work ethic. I got to see everything from him working at the bank. I know they do like a strong background check and everything else. And honestly, that is probably the hardest thing in business is getting people in the right seats and if you get people in the right seats, oh my gosh, it can blow up your bit. I mean, I went from like having 3 million, now we got 11.5 million on the street, and Tony built out the systems where, you know, we could easily put 20 million on the street just in Chattanooga, not even counting if we went to another market. So
From 3 to 11 to 20, did you catch that scaling? Oh my gosh. All right, yeah, Rebecca, my new BFF, LOL. Hey, tell us your story. Like, I know you're raising capital for apartments and raising capital for assisted living, but you tell your story.
Well, my husband and I have been investing in real estate since 2012, very part-time. I spent about 10 years in the tech world doing sales and marketing, but was getting burned out in that space and realized I'm spending so much time here and not building generational wealth. Like, how do I create more time freedom, but also build wealth for my future, for my kids? And so 2020 rolled around, COVID, and was kind of reevaluating everything. And so I ended up quitting my job in the middle of that. People thought I was crazy. My husband and I took 3 months on the road with a camper in tow and our 2 young kids and traveled the country and just dreamed and had the chance to think through, what do we really want out of life? And we are really involved in our church. We want to give. We want to be able to serve. And so realized real estate was really the space I wanted to be in. I've been watching my dad, who's been at the Dealmaker conference the last couple of years, invited me, and that's how I got connected. He's been in real estate for 20 years now, or over 20 years, and done phenomenal. And so it's been really cool to see his journey. It was very inspirational. And so 2020 is kind of when I decided, hey, I want to dive into this full time and really focus all my energy on it. And so we bought more rental properties. I got my license as a realtor, and then I stumbled into this world of passive investing through syndications. And I went to work for a firm locally that was doing fund of funds. And so they were investing in different assets across different markets, across different operators, and I had the chance to learn and invest into my first passive deal as a limited partner. We did $100,000, which was a big leap at the time, and so, but was able to get my feet wet and experience that. And so I went to work for another firm after that was just doing singular asset syndications. We were just buying multifamily apartment complexes around the country, and so learned a lot there before we started our company last April. And so our strategy is really finding best of the best partners that we collaborate and do deals with. And so we've bought apartment complexes and assisted living. We just closed on an assisted living facility in November, an 84-bed property. And it's been really cool to share real estate with people that otherwise wouldn't want to get into it. You know, most people, when they think about investing in real estate, their immediate thought is being a landlord, dealing with toilets and tenants and trash. And a lot of people out there are amazing at their job, and they're not meant to be a landlord. That's a nightmare for them.
Yours
so we
too,
give
Tim.
we give them an opportunity to get into real estate and still get all those benefits with cash flow and appreciation and equity growth, diversification, but it's really passive. And so that's why I'm
So how
passionate
much
about
did you
it.
raise last year approximately for your deals?
It
What
was
do you
probably
think, guys?
1.3 million.
Okay.
I mean, it's over the life of doing this, probably
Yeah.
5 or 6 million. I
5
don't know.
or
I
6
haven't kept
million,
track
that's a
of
good
it. I don't
amount.
know.
Okay, thank you. All right, Jeff?
I'm going to take it from a slightly different approach.
Okay,
right.
door number 1.
I'm going to tell you what not to do.
Oh, I like it.
And I'm going to tell you why I can give it to you from perspective. I watched the multifamily sector just come up out of nowhere, 2016, 2017. And the people I watched doing it, I wouldn't give a nickel to. And so I stayed away from it. I was like,
Me too, Joe.
this is not good. I
It's
mean,
gonna
these
go
are,
south.
I mean, the names I could mention, you've seen them all over social media. I've met them and I've fixed their shit, and I wouldn't, sorry, I wouldn't. Then a partner that I trust dropped a deal in my lap, and it was not the typical deal. It was an elephant. It was a $13 million purchase, and it was in the worst
Only
time.
13 million?
Only 13 million purchase, and it was in the worst time of the economy because we were raising money in the middle of 2023. So rates were going up, everybody was scared. All of a sudden, everybody was panicking, running for the exits in multifamily. But this property, the numbers made sense. But I'm a numbers guy, I'm a deal guy, I'm a transaction guy, so I couldn't tell the story. I wouldn't have listened to Nicole 20 times if she'd have said tell the story. I had to talk all about the numbers because that's what turned me on, was the numbers. So despite not knowing how to do it, despite it being my first time, despite it being an elephant instead of a more reasonable size first target, my best deal raising was one phone call, $2.3 million.
Woo!
Then there was another person in the same room that I got another $500,000 from. So from sitting around a small table with no more than 8 people there, I raised $2.8 million.
Good.
And I will tell you why they did it. And then I'm going to tell each one of you, you can do this. They did it because of reputation. That puts an extra burden on your shoulders if that's how you're going to raise money. But that's the burden it should be on your shoulders if you're raising money.
Yep.
And that means that I had to really know the deal. I had to know the deal inside and outside and upside down. And yeah, there's a couple little things I missed in the deal that, cost some money here, cost some money there, but it's still a fantastic deal. Today it's worth $17 million, so I'm not complaining. It's a year and a half later, almost a year and a half later. So I'm going to tell you that even a dinosaur that doesn't understand social media, doesn't understand marketing, doesn't understand technology, will talk nerd numbers, even that guy can raise money if it's the right deal.
I like it. All right, Tim Davis.
I like your social media, Jeff. When you get up there and do the thing about the
CTA,
Yeah.
the ping pong.
Yeah, that
the
was
being,
good.
Yeah, being ping ponged. Yeah, well,
Yeah, that was good.
that was inspired because I was at a White Elephant Christmas party and I got the Grinch T-shirt as as my White Elephant gift, and so I was like, I got to take advantage of this Grinch T-shirt regarding what's going on to Americans and business owners. But anyhow, and then I will tell you the last thing, and this is important. I've gotten to know Tim a lot better in the last few months because of other people in my network, and I wish she was here. Wendy Coles, I wish she was here, because I was in a spot where I was ready to give up, and she's like, no, we'll figure this out. I'll make some phone calls for you. And thank you, brother, for taking that call.
Oh, you're welcome. So I started out as a fixer flipper, and then I bought a lot of real estate, put a little portfolio together, and got into private lending. But I wanted to look into the syndication model because I thought it was pretty interesting. And so I invested in a couple of limited partner deals so I could understand how it worked and everything. And then in the last couple of years, we've actually done 2 syndications. We raised $2 million in 2023 and bought a mobile home park with no bank financing. We used all limited partners on that deal.
I like that approach, Tim.
Yeah, it was good because we were able to pay the
No
limited
bridge.
partners right away. Yeah,
No bridge loan.
and then this year, or 2024, we actually bought a 118-unit apartment complex and
Yeah.
raised about $4 million for that one. And then I did a couple other deals where I
Did you
raised
had
a couple.
seller financing on that? Tell us a
I
little
did,
more.
yeah. We got seller financing. We got $5 million worth of seller financing.
How about that, guys? What do you think?
5% interest only for 5 years. I guess the guy liked the number 5. Yeah, it was a good deal.
$5 million at 5%. Who would like to do that? Yeah. Yeah, as a borrower.
Yeah, and
Borrower.
and so we got that. We raised the rest of the capital. It took us about 3 months to raise about almost $4 million for the rest of the deal, but that was so about $4 or $5 million in 2024, and then $2 million in 2023. So
That's a lot of millions. You're
That's a
adding
lot.
them up. What are your plans going forward, Tim?
I'm gonna travel.
Plus, you have a property management
oh, I
business.
have a property management business. Yeah, actually, I'm selling it. So
Oh, you're going to sell it?
yeah.
Oh, how much?
This year.
How much can we buy it for?
What?
Somebody may want to buy it.
No, I already got
Oh,
it
you've
bought.
already sold it?
Yeah,
Okay.
already got it
I'm
done.
too late to
Done
that
deal.
deal. Too late to that deal. All right, good. Jeff, you're creating new funds. You filled old funds. Tell us how you raise capital.
So, I told you guys that I'm an analytical human being. So, how do you think my natural sales style is?
Numbers.
It's exactly what Jeff talked
Engineers also. I've had to retrain my own brain.
That's why you and I geek out over paperwork.
about. Oh, I know. Yeah. Right? So, it's like, now, this thing with alpha, right? And using it as a case study of what I'm doing and how I'm doing it and why I'm doing it. And part of the reason why it keeps coming up is because prior to me doing this acquisition, all I ever talked about with people was numbers and statistics about things. That's it. I always wanted to be in a position where the deal was good enough that it just stood on its own. And I've known forever that you have to you actually have to tell people the story about something. Like you have to give them background and information about why is whatever the project is, whether it's alpha or anything else, right? But it's like, why is this a good deal? Why is it in the position that it's in that you can buy it at this price? What are you going to do and how will you take it from A to Z? You have to tell the story. But I've always spent all my time on facts and figures and just leveraging my reputation. And that's it. And don't get me wrong, I've raised a lot of money doing just that. But if I look at like what I could normally raise in a year, it's anywhere from about $1.5 million to $2 million doing it the way that we've been doing it. I made the announcement on Monday before Christmas. That I put out a single Facebook post that said, I'm ready to start taking on investors. I've got a great opportunity. Sent out some Facebook Messenger things to follow up on it. I got 4 days. Like if we count days, not the amount of time, because this is right in the middle of Christmas and New Year's. I only had 4 days to talk to people, and I hit 2 million in 4 days. Because I booked all my appointments for about 45 minutes so that I could actually take the time and talk about what was going on. What was going on in the seller's mind? What are they dealing with? Why are they selling? Where are they going? How are they going to do whatever? What are we doing? Where's the opportunity? And I would just talk about the deal. And I spent this much time actually talking about the facts and figures of it. Now they're in there because they're important. The facts and figures have to be in everything. Like nobody in their right mind should ever invest in something completely and totally blind. So you have to talk about what is the capital that's needed to be, brought in. You need to be able to talk about how many investors are coming in. You need to talk about how much you're trying to raise. You need to talk about when you're going to, what's your timeline and closings and, how funding's going to work and, that you're doing it properly with title companies and, please don't send me money. Because I've had people literally send me money. I've got clients that bank at the same bank I do, and and I've had to scold them multiple times, stop doing this. They just go to the bank and say, can you just transfer $100,000 from my account to Jeff's? And I don't know it's coming. And because it's just a transfer, I don't get an email notification. I get them for wires and ACHs, but I don't get it for a bank transfer. So you stumble on it. You're like, what the heck? Where'd this $100,000 come from? It's like, I don't know what that is. And then you got to sit and try to figure who the heck sent it to you. Reputation's powerful. Story on top of reputation is part of the network. Honestly, that is the thing that I have absolutely figured out with this particular deal. And it's changed the way that I'm communicating. It's changing the way that I'm talking. It's changing the way that I'm even presenting to you guys at this event. Right? If you notice, I'm trying to tell more of a story and paint pictures for you guys along the way to point out not just, hey, do this. These are the details you need to know. These are the criteria to do underwriting. These are the facts. Okay, we're done. It's been 3 minutes.
You know what's interesting
Right.
though, Jeff, too, is that so many of you guys on the stage talked about being able to communicate with story. It's a communication style. And when I created my PowerPoint, I never shared with you guys what I was gonna talk about was story today. Like we never really collaborated in that level of detail. And here we are. So it like all tied in, and I love that. So learn to tell your story. I guess it is important. Go
I
ahead.
think it's personally that's the answer for all of you guys. You know, if you're sitting with it, let's say you guys are the borrowers and you guys are buying properties. Is there not a story that has to be put on the table? Whose story needs to be told? That's the question. Whose story needs to be told? If you're buying the property, who needs to tell the story? The seller does. That's your job, is to sit down and all of your probing questions and all the things you're doing with that seller at the kitchen table, you're finding out their story, because you can't solve their problem if you don't understand the story.
Yeah. Just like the story I told
Right.
about that couple. I want to open it up to Q&A. Can I just have one of the mics? Who's got a question on raising capital? All right. Thank you again for your service.
I'm trying to get back into real estate after a long break from it. I don't have a network. I don't have a reputation. I don't have a track record. I'm starting out from scratch, basically, without knowing anybody that has any money or the contacts to get it. So for a newbie, maybe starting out, I mean, I'm hearing stories about millions of dollars up there, and people starting with a good foundation. But how would a newbie, maybe there's more in this room,
Let me tell you what I would do
break
if I
into,
woke up as you.
Private money?
I'm going to tell you what I would do if I woke up with you. As you. Not with you, but as you. Sorry. It's been a long day. It's been a long day. Bill Cook, you're rubbing off on me, brother.
First,
All
we're
right.
in the woods.
So
I'd be happy to go back 30 years.
get a quality deal under contract. Okay? Get a quality deal under contract. Just, it could be a soft contract with a couple of different outs and loopholes. And then I would leverage your reputation in your community at something like this. Your story, who you are, what you've done for this country, for others, will immediately attract people to you, because the same guy that did what he did in Vietnam is the same guy that's going to do what he needs to do in this real estate deal.
Who in the room
That
would
with a
love to work
quality
with
deal,
this
and you got
gentleman? Raise your hand. Okay, I want Chuck to answer this. Because Chuck, I feel like you were there 5 years ago. Do you? Did you feel that when talking to him?
Oh yeah, as far as not having money.
Well, yes.
Yeah.
You're getting a little bit old, a little bit younger, a little bit older.
Well, to me, it was just a matter of getting out there, learning about what's going on, and learning the fact that there were real estate meetups with real estate investors. I didn't know there were RIA meetings, nothing. And you talk to somebody and they mention it, so you find out when, where, and you show up. And that's where the phrase, I use it so much, be in the room. And I learned where the rooms were, and I showed up to, as far as learning other real estate investors to get their knowledge. Now, as far as raising money, and I'll talk more about this. I won't go into it today. I'll talk more about it tomorrow. But I went to a meeting, and there was a speaker there that financially changed my entire trajectory in life financially. It was Dorsey Boterford Cooney. and she shared with me a technique, a strategy for investing that I've used to this day. For the last 5 years, I've been using that strategy, and it's just totally changed my life financially, without question. So be in the room, meet people, listen to speakers today. Tomorrow you'll get more information about this. And like Jeff said, find a great deal. If you find a property that someone wants to sell and you can get it for a good deal, the money will show up.
It will. All right. Hey, Yvonne. Touchdown? I can't throw like Josh Allen now. There you go.
Ivan
Yeah.
Malpica, or I run the Orlando Dealmaker.
Yes.
Quick question. So I've been investing for about 11 years now, and always I love to tell my story. Of course, everyone does, wants to tell their story. But I have people saying, "Hey, yes, I have 100. I got 200. I want to invest with you. I want to invest with you." I'm like, "Great, but I don't have a deal right now. I'm sorry." How do I lock those people in and ensure that I have them 3-6 months? It takes
Get
a
their
while to find a
contact.
good deal.
Get their email, get their phone number. Go ahead. I'll let you guys answer.
I would say that just keeping in touch with them on a regular basis and letting them know that you're looking for a deal, you don't have a deal, but as soon as you get one, you'll give them a call.
Okay.
I mean, it's about relationships. When you're trying to raise that kind of money, it's about who you know and who you can talk to at the time. When
I
you
think
need
follow-up's important. If you start a newsletter and you start telling this list in your email list, what you're doing, where you're headed, what your deals are, and then ask them if they want to be contacted the next time you have one, they'll sign up and you'll nail that down. That's my opinion. But go ahead, Joe, what do you think?
So we've had massive success getting a soft commitment from actual private money lenders. So we just send a regular form saying, "Hey, how much would you be able to commit if we had an opportunity?"
It's a good way to
So
put
by
it.
them actually signing on that, they kind of feel like,
Soft
okay, hey,
commitment.
you know what? It's a soft commitment. It's not nothing, out there. But at least when you bring a property or a deal, they're ready. They sign on this document. It's a soft commitment. I mean, regardless, they could actually say no even after signing it. But at least having a soft commitment helps you solidify that you're serious about this. And when you're ready, they're ready because they already signed that. So that helps Giovanna and I
This is a great
get,
table. Oh my gosh.
get a
I
soft
like
commitment.
it. Love it. Okay, thanks for asking that. Anyone else got a question? All right, I'm coming. Here we go, Foster.
Thank you.
Who lives very close to this hotel. How many miles away?
I could walk.
Oh, we're going to your house for the after party.
Could be good.
All right.
So my question kind of follows Ivan's, that it's a little different. Like, what's starting a fund look like? I mean,
Oh,
you're talking about,
Good question.
holding money on the side, waiting for a good deal. But then I hear you, well, I started a fund for $3 million. I mean, that's on demand,
How
right?
do you know when you need a fund and when you don't, and how do you start one if you decide to do it? Jeff? Jeff and
I am
Randy.
I
would be
am
good.
not an SEC attorney. I have got a partner that is a serial raiser, and so this is like 17 different PPMs and different funds, all highly regulated with a registered investment advisor, the whole game plan out there. And so I see it from the really complicated way. If you've got just a one-off deal and you really believe it's going to be your only deal, you don't have to jump through all those hoops. It can
Find
be
a
lot
private money
simpler.
lender or a hard money lender.
It can be a lot simpler.
Yeah. Jeff, how do you know when you need to start, if you start pooling and stuff, I mean, what does it really come down to?
So there is absolutely 0 point in your entire career where you absolutely need a fund. No matter what anybody out there tells you, you can absolutely do this business without ever having one. It's a choice. Do you want to, what I'm just going to call the broker model, do you want to get deals and have private people just fund them and let's just keep it simple, one person lends money on one deal that you originate and find for them,
That's how I do it.
okay? You can do that hundreds of times a year, no problem. You can manage it all, no problem. The issue just becomes how much work is that? And so some people start saying, it would just be easier if I had a fund, Because if I have the fund and all the money is just sitting, I can just do things.
But what's the downside on the regulation of a fund?
Yeah, so
Oh,
so first of all, the SEC is not your enemy. Okay? There's a lot of horror stories out there about the SEC. They are not
so
your
that's
enemy.
a self-limiting belief.
Correct. It's a self-limiting belief. The only real purpose that the SEC's job is just to make sure that honest people are honest and that we're running good, clean deals and doing what we promise. That's it. Now, the horror stories all come from when people get a fund, a syndication, whatever you want to call them, and then they don't do what they say they're going to do.
Don't perform.
When you don't perform, that's when all the regulations and all the bad stuff starts to rain hellfire in your world, because that's about what it's going to feel like. There have been, and I know Jeff has had to deal with it a lot more than I have, but over the past 2-3 years, right, there's been several Ponzi schemes that have come out. One of them is massive. Well, actually, all of them are massive. It's just one's just a lot more massive than the other massive.
To the tune of $140+ million.
Correct.
That's massive.
Correct. One at 50-some million, right? It happens. The real question is,
Not on my watch.
yeah. So, do you want to take on the responsibility of doing that? That's really the question. Is do you want the responsibility of that kind of management? I'm not saying that to try to scare anybody. I'm just telling you that's the choice. Do I want to do business this way or do I want to do business this way? There's pros and cons to both. One model is a lot easier to run your business with than the other. Doing them one at a time takes more work. More risk, more work. Can you build systems on this side to help reduce the risk so that you always do what you say you're going to do? Can you bring in the right people, right? It really boils down to choice and teams, and can you actually execute?
And how big do you want your business to be?
Right, how big do you want it to be? I know people that are doing $70 to $100 million. They don't have a fund. That's how much they're running on the streets, all one-off deals. So you don't have to do this.
Anyone else have a question? Oh, okay, we got a couple right next to each other. Sing to me, Sharon.
I can try to sing the question.
You're going to sing with Tim playing the guitar tomorrow.
Yeah, that's going to be fun, and that's very impromptu also. So I look
I
forward
love
to
that
doing
about
that.
Dealmaker,
That's
though.
going to be fun. So actually, it piggybacks on his question to Jeff. So what happens if the money is just sitting there idle, and how does it make money if it's just sitting there in
Ooh.
between deals
In a fund.
in a fund?
Idle money in your fund. Randy, you want to take this one? Can you? Oh, you guys are out of mics? Oh, there you go. Get you
Really-
back involved here. Mission funding. Go ahead.
It really depends on what kind of fund you have.
Oh.
There's equity funds or debt funds. With debt funds, then that money's ticking. So ours is a debt fund. So when that money's not
You're
utilized,
paying interest on it,
you are-
is
yeah,
what you
are
mean.
yes.
So you're motivated.
So I mean, it's debt versus equity. So the good thing about debt is your upside can be much more. Whereas if it's an equity fund, you're sharing whatever that fund makes. I've always been very comfortable with the debt side because we've never really had a problem deploying any of the money we've taken in. But that is, I mean, there's something to that as far as equity is safer, but I feel like debt, you can make more money if you can keep that money deployed.
Gotcha. Good perspective. Do you have anything to add to that, Jeff?
I have one of each.
You have one of each.
I have
okay.
a debt fund and an equity fund.
Yeah.
And exactly what Randy is saying is really the trade-off, right? Now, we did equity first. And the only reason that we did the debt fund was because the company had grown enough and volume had grown enough, and it's simpler to market. So it was, again, it goes back to a choice. The challenge is the same, but the choice was different. We chose the debt fund in a 506, Reg D C fund, whatever the order is. And we chose that because we wanted to be able to market to accredited investors to raise capital. As we continue to grow and as we continue to need, we need to continue to raise capital. Otherwise, you end up having to say no. Nobody wants to say no,
yeah.
right, to borrowers. And now you're not making money. But as long as you can keep it busy, both models work, just one is a lot easier to manage.
That's a good question. All right, Chuck, you had a question. Sharon, that was
Jim,
a
let me make
really-
one observation
Go ahead,
about
Jeff.
from an equity fund perspective.
Okay.
Remember, I'm the guy that didn't like swimming until he got over to the deep end of the swimming pool and they pushed me
yeah.
in. So I've only learned about it from the really that deep end. In the equity fund that I'm involved with, all of the money comes in and is held by a third-party registered investment advisor with all the regulatory scrutiny on them. And it's kept there until it's time to send it to the title company for the closing.
Interesting.
So you don't have to worry about the operator or the sponsor or the fundraiser, grabbing the money and running off to Brazil. It can't happen. They don't get a chance to touch it. That's
good.
That's the other way of looking at that.
I like it. Chuck, what was your question?
As a private money lender looking for co-lenders, people to come into loans, what restrictions or cautions should one take when it comes to advertising for funds?
Securities? Well, you're not really selling a security. All right, go ahead. What do you guys think?
I don't advertise.
Well,
But if I was to advertise, I would indicate that I'm looking for people who might be interested in owning a mortgage on real estate with a note. Now, why am I saying it that way? Why am I saying somebody who might be interested in owning a note with a mortgage on real estate? Because that is a very clear carve-out by the United States Supreme Court as not being a security.
by the way, Rick, you just made a post this week on co-lenders
So
that I liked.
I won't advertise. I do it all mouth verbally, et cetera, talk about what I do. Chuck, you talk about what you do, you're going to have people ready to, and then you can get to the point where you've got a little spreadsheet, you've got a little list where everybody's listed as a blind copy, and you just paste the facts of the deal in there, and the bottom line says,
First come, first serve.
first come, first serve. When it's full, it's full. When it's
But
taken,
I
it's
can
taken.
tell you, as a wrap lender myself, finding that right co-lender can be challenging at times because they're a lower interest as well. And the trade-off is they're 100% passive because the wrap lender does all the work, the underwriting, servicing the loan all the way through. Who had their hand up? Joe? Are we back to you again? All right, here we go.
JW, let me ask you, say those exact same
JW.
sexy words you just said.
Listen to the
JW,
recording.
I love it.
It's gone. It's gone. I'm sorry, it's gone. I mean, I'm talking about the fact that we're speaking of is somebody interested in owning a note secured by a mortgage on real estate, because that's not a security.
How are you?
Yeah, I'll just piggyback on that. That in the security world, you think about like shares of stock, and when people are putting their money with someone and they have no control over it all, it's run by board of directors, it's run by a fund, it's run by something. They're just truly passive investors. That's a security. And in fact, those of you who bring in investors into your LLCs and make them just members with no management rights at all, you've got to be careful because you may be issuing a security.
Yes, you are.
That's a totally different thing from what I'm getting ready to
Good
talk about.
perspective.
But if you're just looking for a co-lender, and that co-lender is literally going to be an owner on that note, they have the absolute right to go foreclose if they need to. That's not a security. So we don't worry about the advertising and the SEC rules and all that. If you're just looking for a co-lender who's just a lender with you on the note, that's not a security. Would you agree, Jeff?
I completely agree.
So who wants to be my co-lender? I'm just kidding. All right, Sharon, you got one more? We got time for like one more, and then it's almost networking time, guys. Hey, Lauren, how you doing?
I'm good. How are you?
Doing good. Not skipping through this room quite as fast as I was. Oh, okay, we have one more over there. You're going to send me back over? Okay. Take it away, Sharon.
You get your steps in today.
I am definitely getting a lot of steps.
Well,
Let's
and it
see.
piggybacks also on that question too in regards to
7,000.
co-lending. So for folks like, as I work for Jeff, I know I've been learning a lot from him, but other perspectives as far, or Jeff C., not Watson, even though
okay.
we support the curl. But, oh yeah, if anyone hasn't seen this, you'll got to come see this in a little while. But anyway, he even signed it. That's a whole nother story at another time. But anyway, so my question is, as far as someone like myself that's working with Jeff C., and we are out there sharing that, you know, we're a hard money lender and we rent money and all that good stuff, what are some great ways that we can promote that on social media to be able to let people know that we are lending and stay within proper guidelines?
Tell the story of your borrowers. Go ahead, Jeff. Somebody.
So when you're looking for borrowers, that's really not an issue. Because you're not raising capital, you're just saying, hey, I have money, would you like to borrow it? That's not the same thing. How many of you guys follow me on Facebook at all?
Sorry.
Okay. Have you guys seen me ever post anything that looks like it might be a solicitation? No. Really? I don't do it every day, but I absolutely do it covertly all the time. And when I do it, I always ask at a moment where I don't need the money, like the acquisition of Alpha. I made a post on Facebook as an exploratory question just to find out if anybody out there would be interested and would rather own a lending company than just owning a single loan, right? And so I asked the question, would you rather get paid on every loan that the lending company ever originates or just on the money that you have? Guess how many responses I got on that? A lot. I got like 90 people who all said, oh my God, when it's put that way, I'd rather own the lending company than do it. Okay, so now fast forward. Did I have to solicit anybody when we actually had it under contract? No, because it's a very distinct time. As a matter of fact, in this particular case, there's a gap between when I asked it and a completely different opportunity that was existing, because this is actually my second crack at the same company. And there's a story behind it, right? There was another person I was going to partner with. We would not have made good partners. I walked away from the deal. I have a documented time gap where I was definitely not involved in the deals, but I still asked the question. I ask probing questions unrelated to what I'm actually trying to do. Trying to position people to create interest in something that I might want to do someplace in the future. And now I have a direct contact with them. And from there, it's very easy to continue building the relationship, because anybody that's ever looked into SEC stuff, while this isn't a law, you can call it one because the SEC will sort of enforce this rule. They call it the 3-touch rule. You have to create a relationship with people. You have to have X number of touches with them in X amount of time. And I've heard it said as, it's always called the 3-touch rule, but it could be 30, it could be 45. The more conservative attorneys say 45, the more aggressive guys say 30. I don't know which one's the right one, but either way, build the relationship. I just create opportunities before I need the opportunities. Because
so never stop.
Right, because now I have a pre-existing relationship. It's a different way. It's not circumventing the rules, right? Anybody here ever been to a Pete Fortunato event?
Mm-hmm.
Okay, what does Pete talk about? Malicious obedience, right? Malicious obedience, he talks about it. Malicious obedience is learning the rules so well you can use them against the rule maker. So, and the other thing that goes with that when he talks about it is learn to listen for what's not said. What's not said is more important than what actually is said. That's how you figure out how to get around things. You're not really getting around it. It's just you're finding a path that makes sense, that works. So if you guys want to raise capital, create artificial opportunities so that you can create relationships with people so that when it really does show up, it's just a phone call instead of soliciting.
I want to add on too, I think social media is really powerful, but don't stop there. You know, like the relationships are so. I've gotten investors through social media, but I think that the relationships you're building on an ongoing basis, and then you're asking them for referrals. I'm taking a course right now. Has anybody ever heard of Giftology? Giftology, and it's that book is awesome. The company's really great. The founder, John Rulin, actually passed away this last year, and it was really sad for those folks that knew him. I have friends that knew him, and the course though that they created is all about building your business on referrals. And
Yeah.
I think it's so important
powerful.
to have those ongoing relationships, and then ask. I mean, so often we forget to ask. You know, is there anybody that you think might benefit from investing with us? You know, we're so happy that you're here, and it seems like you're happy. Hopefully you are. Like, what can we do better, and how might other people
Powerful
benefit
thought, Rebecca.
from us, you know, sharing what we're doing with them?
I love referrals. Okay, thank you guys. You guys are awesome. So we just